If the crypto market crashes tomorrow, do you know exactly what to do? These 5 defensive moves can protect your assets in the worst market conditions. I will show you the strategies that smart investors are implementing right now. If you're ready to take full control of your capital, follow this video to the very end. Defensive Move 1. Anti-fragile portfolio architecture. During the 2022 crisis, investors who had allocated 30% of their portfolio to stablecoins not only survived the crash, but also bought cheap assets at the market bottom. In this section, you'll learn how to design a portfolio that can withstand any market condition using fixed ratios and smart diversification. This 3-layer architecture includes high-risk assets, low-risk assets, and liquid assets. For example, we carefully define the 3 layers. The first layer consists of large-cap cryptocurrencies like Bitcoin and Ethereum, making up 50% of the portfolio. The second layer includes mid-cap altcoins with higher growth potential but moderate risk, comprising 30% of the portfolio. The third layer consists of stablecoins and liquidity for market opportunities, making up the remaining 20%. The key is to review and rebalance this allocation every 3 months. When one asset experiences significant growth, take some profits and transfer them to the liquidity layer. This not only locks in your gains, but also creates a reserve for buying at lower prices. Defensive Move 2. Tiered stop-loss system. When Bitcoin crashed 40%, professional traders protected most of their capital using tiered stop losses. In this section, you'll learn step-by-step how to set up this system, from determining critical levels to calculating position size based on market volatility. The tiered stop-loss system includes 3 main levels. The first level activates when the price drops 10% from its recent high, closing 25% of your position. The second level activates with a 20% price drop, closing another 50% of your position. The third level activates with a 30% price drop, closing the remaining position and preventing further losses. You can set up this system on platforms like Binance or Bybit using the OCO, one cancels the other feature. The important point is to adjust stop-loss levels based on each cryptocurrency's historical volatility. For high volatility coins, set wider levels to avoid premature position closure. Defensive Move 3. Active liquidity management. During the Luna crisis, those who had sufficient liquidity available were able to hunt for undervalued assets at market bottoms. This section teaches you how to always be ready for exceptional opportunities using dynamic allocation and lending tools. Active liquidity management involves 3 main strategies. First, always keep 15 to 20% of your portfolio in cash. Second, use lending platforms like Aave or Compound to earn interest on your liquidity. Third, use stablecoins like USDC or DAI that maintain a stable value while generating passive yield. An advanced technique is using the barbell strategy. In this strategy, 80% of capital is placed in low-risk assets and 20% in high-risk opportunities. This way, you protect your principal capital while potentially earning significant returns from successful high-risk bets. Defensive Move 4. Monitoring on-chain data. On-chain data provides the earliest warning signals. In this section, you'll learn how to monitor vital indicators like exchange flows, whale activity, and the Fear and Greed Index to make informed decisions. The exchange flow indicator shows whether capital is moving into exchanges, indicating potential selling pressure, or out of them, indicating accumulation. Whale activity is also an important indicator. When whales are buying, it's usually a good time to enter. Tools like Glassnode and CryptoQuant provide free and useful data. The MVRV, market value to realized value, ratio is another helpful indicator showing whether the market is in overvalued or undervalued territory. When this index reaches above 3.5, it's usually a good time to sell. Defensive move 5. Crisis management psychology. Fear and greed are an investor's biggest enemies. This section teaches you practical techniques to master your emotions during critical conditions and avoid impulsive decisions that lead to losses. The first technique is creating a pre-trade checklist. This checklist should include items like trade purpose, exit point, stop loss, and review conditions. Review this checklist before every trade. The second technique is using a trading journal. Record every trade, entry reason, exit, emotions during the trade, and lessons learned. This helps you identify your behavioral patterns. The third technique is practicing mindfulness. When the market is highly volatile, take 5 minutes for deep breathing before making any decision. This short time gap can save you from emotional decisions. Also, always remember that missing an opportunity is better than losing capital. Now you are no longer an ordinary investor. You are a strategist armed with 5 defensive moves who knows how to not only survive but triumph through market storms. Take this knowledge seriously because few people are aware of the secrets to protecting assets in volatile markets. If even one move from this video can protect your capital, like this video and hit subscribe now. Remember, true wealth isn't in quick profits, but in preserving assets and achieving sustainable growth. You now possess this knowledge. Use it wisely.